legit. Anything you want.
SEC delays decision on Bitcoin ETF, sets deadline for late February. The United States Securities and Exchange Commission (SEC) has again postponed its decision on a Bitcoin BTC exchange-traded fund ETF, according to an official document published Thursday, December 6. The SEC set the new deadline for February 27, 2019 in order to further review the rule change proposals to list a Bitcoin ETF by investment firm VanEck and blockchain company Solidx and the Chicago Board Options Exchange (CBOE). The Commission finds it appropriate to designate a longer period within which to issue an order approving or disapproving the proposed rule change so that it has sufficient time to consider this proposed rule change. Under the Securities and Exchange Act, the Commission must issue an order approving or disapproving the proposed rule change not later than 180 days after the date of publication of notice. If the Commission deems it necessary, it may subsequently extend that period by 60 days. As the proposed rule change was first published in the Federal Register on July 2, 2018, the maximum period of consideration falls 240 days later, on February 27, 2019. Both VanEck and Solidx firms filed with the SEC to list a Bitcoin-based ETF on June 6. Subsequently in August, the Commission delayed its decision on listing the ETF until September 30. The Commission then requested further comments regarding the decision, claiming that the agency has not reached any conclusions with respect to any of the issues on the rule change. In early October, the Commission set a deadline for submitting comments about proposed rule changes related to a number of applications for Bitcoin ETFs. Last week, the SEC published a memorandum on a meeting with representatives from VanEck, Solidx and CBOE. The applicants claimed there was precedent for a Bitcoin ETF based on other commodities with ETFs like gold and crude oil. Recently, SEC Commissioner Hester Peirce, who is known for her pro-crypto stance, receiving the title of Crypto Mom, claimed that a Bitcoin ETF could come tomorrow or in 20 years. She said, "Don't hold your breath. Look, it took a long time for the SEC even to establish an hub." SEC attacks again. Strikes down 2 Ethereum-based projects. Earlier this week, the Securities and Exchange Commission made the headlines by striking down the founder of EtherDelta, a decentralized exchange platform that offers services for Ethereum-based tokens. This had grabbed the attention of several people involved in the space as it was the first time a founder was scrutinized by the SEC. This also sent across a strong message to the entire community, that is, the developer will always be responsible for their innovation. Now, the SEC is back in the limelight, striking down 2 ICOs at the same time. The projects that were targeted by the SEC are Paragon Coin Incorporated and Carrier X Incorporated Airfox, both of which are Ethereum-based, and the ICOs were conducted in the year 2017. The Commission claims that the ICO was conducted after they released a report on their investigation of DAO, a digital decentralized autonomous organization, the main reason for the split of the Ethereum blockchain. The Commission added that according to the DAO report, ICOs can be classified as securities offering. Additionally, Airfox raised around $15 million worth of cryptocurrencies for the development of their project. The project pitched by the team during the ICOs was creating tokenized ecosystem that enables users to earn tokens and exchange the tokens for data. Whereas, Paragon raised $12 million worth of cryptocurrencies for the development of a product that is, introducing the blockchain technology in the cannabis industry. Since both the ICOs were not registered under the federal securities laws, the SEC has imposed a penalty of $250,000 each against both the companies. Moreover, they are required to compensate armed investors who took part in the ICO and also file a report with the SEC on a periodic basis for at least a year. Stephanie Avakian, co-director of the SEC's Enforcement Division, said, "We have made it clear that companies that issue securities through ICOs are required to comply with existing statutes and rules governing the registration of securities. These cases tell those who are considering taking similar actions that we continue to be on the lookout for violations of the federal securities laws with respect to digital assets." Stephen Piken, co-director of the SEC's Enforcement Division, stated, while providing investors who purchased securities in these ICOs with the opportunity to be reimbursed and having the issuers register their tokens with the SEC. These orders provide a model for companies that have issued tokens in ICOs and seek to comply with the federal securities laws.